Hello, master traders and money magnets. We had a pretty cool day of trading. We had some nice volatility. Now, if we look at the daily chart, right, and you just look at that candle, was still rejecting, getting selling pressure from that multi-month trend line, downtrend line, and we are still within the chop range. We are still within this wedge, guys. We're still in the chop phase, if you will. However, I thought it was a pretty good day when we look at, day trading wise, and we look at the 15-minute chart. It was pretty volatile. It was definitely tradable, in my opinion. We had a beautiful move to the upside. We had a beautiful move to the downside. There's all types of chop days, right? We had chop days where it's just consolidated in a tight range. It's not going anywhere. And then we have days like today where it's not going anywhere, but we had a beautiful move to the upside and beautiful move back to the downside. Price didn't go anywhere, but it was definitely tradable. Now, I wrote in my Discord, first post of the day, 9:26 a.m. Below 563.5 is a breakdown of the wedge. That wedge I just showed you guys on the daily chart. Put in 562, 560.8, and 559 in play. Trust no bounce unless 565 and 566.4 can clear. Now, the thing was about this, right? SPY actually opened on the first candle below 563.5, and it actually cleared 563.5, okay? But I wrote in the other Discord, I had to respond to an email. I had a few emails I had to respond to, so I was a bit late, right? But notice on the first post, I said trust no bounce unless 565 and 566.4 clear. Starting with 565. Now, what does Uncle always say? When do we consider a breakout or a breakdown? We use the 15-minute chart and we want to see the close, right? You see that first candle. It cleared 563.5. Obviously, I missed that one. But 565 cleared. Now, if you remember what Uncle said in the first post, if we clear 565, we can get a bounce. Well, it cleared 565 on the 15-minute chart. That's your intraday entry for calls. Boom, cleared the next one, 566.4 on the 9:45 candle. It cleared it. The 10 o'clock candle treated 566.5 as support and popped even higher where we cleared 568. Now, I think I did a little bit better. At alerting the group about those setups. It was a beautiful setup. We hit 570. So I did miss the 563.5, but for 565 and 566.4, that was a nice pop. $5 move, $5 to $4 move, up to 570. Before it gave us the pullback, the intraday pullback. Now, what happened on the intraday pullback? Well, Uncle had the 570 level. Just like on the daily chart or any time frame, I always say you don't want to call a bottom or a top unless we get some type of trap setup, right? So if you're going to call a top, you want to see a false breakout setup. Well, we cleared 570, broke back below 570, false breakout. I think I missed that one too. However, I didn't miss the next one. Broke down 568 right there. Boom, gave us a level move down to 566.5. And it never recaptured 568, and it smashed even lower down to 565, going a little bit lower. So, see, in my opinion, if you know the levels, know the setups, you trade unbiasedly, today was a good day trading day. Not good for swing trading, though, okay? And that's the next thing I want to talk about, swing trading. When is the best time to swing trade? Because sometimes people say, Uncle, you just focus so much on day trading. Some of us work, Uncle Charters. We don't got time for the day trading, man. I understand. Hey, I've been day trading for years and I find it to be easier, okay? Everyone has their own strengths and weaknesses. Some people will say day trading is harder than swing trading. I think that swing trading is harder because I'm going to be real with you guys, Uncle Charters. If I'm holding a position overnight, and I do swing trades from time to time with runners, but most of the time I don't. But when I do, I get very nervous. Uncle get very nervous. Okay, sometimes I lose sleep at night, holding a position overnight. I don't know where it's gonna happen, if it's gonna go up or down. I think about it. I get anxiety. So what happens, Uncle? I don't really swing trade, but when I do swing trade, and I do occasionally, it has to be something I'm comfortable with. Everything has to be right. Everything has to feel right. So that's what I want to talk to you about. When would Uncle Charter swing trade? Now, if you guys been following me long enough, you guys know that I'm just a price action guy. And one of the price action principles to be really good at trading price action, you gotta know the phases of the market. The market's either in, right? The market's either in the trend phase. Where's my arrow? Right here, the trend phase. See, in this case, from mid-February all the way down to mid-March, that past month. That's the trend phase, one of the longest trend phase we had in a while, but that is the trend phase where that green arrow is pointing at. When we are in the trend phase, you stick with the trend, guys. Some trend phases are longer than others. That's what makes it difficult for the inexperienced. But when we're in the trend phase, you want to stick to the trend, right? You know, they say the trend is your friend, right? So if the trend phase is bearish, you want to play breakdowns of support or false breakout setups. Okay, that's the trend phase. But the phase that we're in now is the chop phase. The chop phase is needed. Some chop phases are longer than others. Some chop phases are longer than others. I know, and a lot of people don't like it. And what makes the chop phase even more complicating is that every chop phase is different. Some come in the form of a wedge. Some come in flags. Some come in channels. Some even come in diamonds. It comes in different shapes and sizes, is what Uncle was saying. But the core principle of the chop phase is the same. No matter what shape, no matter how big it is, the principle of trading the chop phase is the same. You identify the chop range. And in this context, the chop phase is in the form of a wedge, and we do have the range. Okay, so the idea of trading the chop phase in the trend phase, the chop phase in the trend phase. Well, I'm pointing at the wrong one. The trend phase, you stick to the trend, and then the chop phase, the idea is that if you're going to swing trade, you want to wait for the break of the range. Okay, that, in my opinion, is the best time to swing trade. It's when a lot of people, they want to catch it when it starts. They want to catch the trend before it starts. Well, the trend starts when the chop phase ends. Okay, so when we're in the chop phase, I know it's boring for some people and it takes a long time and volatility is getting smaller and weaker. But when the chop phase ends, and I do mean when, because it always ends, it doesn't last forever. But when it ends and that trend phase return, that is where the money is made. That is where you want to swing trade. So, okay? So even though right now that for some swing traders the chop phase sucks, day traders, we're having a good time. But for swing traders, the chop phase sucks. Okay, I get it. But when it ends, you want to be ready. That's why it's good to watch Uncle Charter's video. Even though I'm more of a day trader, price action guy, the price action serves everybody. Okay, it serves everybody. It's a tool that can serve everybody. I just use it for what I use it for. But it can be used for swing trading as well. And if you understand the chop phase and the trend phase, that concept, that very simple concept, not easy to do. It's not easy. Uncle not say it's easy, but it's very simple. And the more you understand it, the more easier it can get. Okay? So, what's the point I'm trying to make? Swing trading. The best time to swing trade is when we break out the chop phase and we are in the trend phase. And the idea is to swing trade with the trend. Right now, we are not in the trend phase. It's still overall bearish trend, but if we're talking like more micro, we are in the chop phase. The chop phase of this trend. Does that make sense? Okay? And we don't know where it's going to go because we have this downtrend line. If it breaks out tomorrow, it will need to break out to break out the downtrend line. It would need to break out. Here's the bull case. It would need to break out 566.4 once again. Actually, a daily chart close. Okay, the context is a little bit different this time because that trend line slopes down. So clearing 566.4 again would put the bears at risk of SPY being in breakout mode. And if we get in breakout mode, I mean, bulls still have more levels they need to clear, but breaking out this downtrend line is not a good sign for the bears. I think we can all at least agree on that. Now, if we do clear that, next target I'll be watching is 572. Well, 564.4, I got 568, 570, and then 572. That would be the top of the wedge. We get above 572, we break out the wedge, excuse me. Keep in mind, the 200 daily moving average is literally lingering right there. Okay, it's 573.4. So if we clear 572, 573.4 is then in play. All right. Are we bullish yet? Not quite. Bulls still have a lot to do. They need to break out this downtrend line. They need to break out the wedge at 572. They need to recapture the 200 daily moving average, break it out at 573.4ish. And then what? Are we finally bullish? Not quite. You guys see that pivot low from January 13th, okay? To avoid higher lows, to avoid lower lows and lower highs, SPY need to take out that pivot low right here to send us higher. So 575 would be another level to watch. Critical level to watch. That is the bull case, guys. Clear 566.4 to clear out the downtrend line. Clear 572 to break out the wedge. Clear 573.4 to recapture the 200 daily moving average. Break out 575 to clear a fib level and to take out this pivot low. All right, that's the bull case. Bulls still have lots of work to do. My advice, if you are a bull, is to trade unbiasedly. That's for one thing. The second thing is take it one setup, one level at a time. Even though the bulls have a lot of work to do, it doesn't mean they can't do it. Take it one setup, one level at a time. Bear case scenario is next. We are still underneath the downtrend line. We are still within the wedge, which means we are still overall bearish. We just need some bearish follow through to show us that lower high is in. The bottom of the wedge needs to break and it's climbing up. It's actually getting very close to that 566.4 level. It's so critical, that level. Below it, which we are right now, would be bearish. Okay? Bearish follow through would be to break down 565, 563.5, 562 in the fib level at 560.8. If those levels fail, it's a good chance that this test of the downtrend line here could be that lower high and either send SPY back to previous pivot low or keep the trend going and sending us to a lower low. All right, so today the 5 survived. What's the 5? That's the 5 daily moving average, okay? That's the 5 daily moving average. Very close to my 565 level. If we're below 566.4 and we break down 565 and we break down 563.5, we are bearish, guys. Because today the 5 survived. But if it doesn't survive tomorrow and it breaks down, we are bearish. All right, guys? And we're only bullish if we can break out that downtrend line, break out that wedge, and recapture the 5 daily, and recapture the 20, and recapture the 200 daily moving average. Here is the triple Q, also still within the triangle pattern. We actually got the third test, almost a third test of the top of the triangle pattern, guys. Now, while the 5 survive on the SPY, triple Q closed just a smidge below the 5 daily moving average. Okay, once again, we're at right around that 479 level. It's like a darn magnet, But if we are to be bearish, we need to stay below 479, break down 477. Below 477, we are breaking down that triangle pattern down to 474 or lower, we go. Okay, that's the bear case scenario for triple Q. Bull case scenario, it needs to get above 479, which it is right now. But what it really needs to do to get away from that magnetic 479 level, clear 481, 482.5, but break out 484. A breakout of 484 would be a breakout of this triangle pattern. End the chop phase bullishly. Okay, you want to end the chop phase bearishly, break down 477. If you want to end the chop phase bullishly, break out 484, and that should send us higher, up to 490 or higher. Okay, Tesla looking choppy. We have an inside candle set up on Tesla, chop range being 229.2 up to 241.4. That is a long chop range, but I gave you guys a range. We got to see it where it breaks out to, and that's where I'll be leaning. But before we even get there, as of right now, Tesla's around 236, which means I have support at 234.5. That's a fib level. So 236 and 238 must clear to send us up to 240, 241.5. And yeah, if we can clear 241.5 and the mother candle's high, it was about 241.5. If it clears, we're bullish. Okay, 243.7 or higher incoming. I think we can go fill the gap around 247ish. Now, if we break down 234.5, 233, 233, 231, 229 would be all in play. Below 229, I would be bear bias. That would break the chop range to the downside. NVDA also has an inside candle setup. Now, its range is 115.6 to 120.5, okay? As of right now, once again, I have support at 117. If we are to end this chop range bullishly, we need to get above 120.5. I do have a fib level at 119.5, but above 120.5, or you can round it to my resistance level. I have a resistance level 121. So we clear that level, I would definitely be bullish 123 or higher in play. I think we can definitely get higher than 123. If we are to get bearish, we need to break down the mother candle's low, which is at 115.6. But to even get there, we'll need to break down 117, and then we'll get to 115.6. I do have a support at 115. And if we break down 115, I will be bear bias, chop ends bearishly at 113, and the gap fill at 109-ish in play. Coin. Well, we also have another green day slightly from yesterday. After it recaptured the fib level at 185.8, it treated that level as a support today and found some buying pressure, but it needs to take out the next sell zone. Okay, I have resistance at 192 and 194. Above 194, I'd be bullish. 196, 197.6, and 200 plus would be in play. If we are to get bearish, as usual, support levels must fail. Break down 190, break down 187, and definitely break down 185.8. If 185.8 fails, Uncle Charters would be very bearish on coin. Okay, and here is the VIX looking bearish. After breaking down 20.8, today it rejected 20.8. Rejected it. Resistant. It's bearish. Now, if we do want to get bullish, it need to recapture 20.8 to put 22.5 or higher in play. Next support's at 19.5. If it fails, 18.6, 16.5 or lower incoming. Guys, I just want to thank you guys so much for being here. You guys mean the world to me. I love you guys so much. You guys are the best. You guys are money magnets. The money flows to you guys abundantly, easily. And it's going to do that again tomorrow. I can't wait. Thank you, God, for the money that we've made and the money we're going to make. Beautiful. I'll see you guys tomorrow. Love you guys. Peace.